This is FinTech Insider News. This week, Checkout.com dives deeper into US banking with its new charter license. We hear from Yapily about their new account verification services for business customers in Europe, and Monzo is plotting its latest move in the US. We'll be discussing all of this and more on today's news show, so don't go anywhere.
This episode is brought to you by Infuse, where agility meets scale, where compliance meets confidence, and where bold ideas become reality. Find the only place where card issuing and processing comes with happiness built in. The Infuse modular next-generation platform gives you exactly what you need, from BIN sponsorship and scheme access to compliance and fraud prevention, while you stay in control of your customer experience and roadmap. Infuse, innovative card issuing and processing that fuels innovation. Discover more at infuse.com. Does moving money across borders feel scary? This episode of FinTech Insider is brought to you by 3S Money, a fintech scale-up that makes global payments simple, predictable, and human. With 3S Money, your business gets multi-currency accounts and local IBANs, enabling you to send and receive payments in all major currencies, reaching the widest possible range of destinations. You'll also have a dedicated account manager, a real person, not a chatbot, guiding you through every step of the way. Enjoy the best FX rates, fully transparent fees, and premium service backed by regulation you can trust in the UK, Luxembourg, UAE, and Hong Kong. Go global with confidence. Open your account today at 3s.money and find out more.
Hello and welcome to episode 1005 of FinTech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks and fintechs to build the next generation of financial services. I'm Kate Moody, Strategy Director here at 11FS. This week, I've been spending quite a lot of my time thinking about different subscription models in banking. Meanwhile, best-selling pop star Taylor Swift has dropped her latest album last week. Arguably slightly more exciting than my week, smashing records with first week sales and becoming Spotify's most streamed album in a single day this year. We're not quite hitting those numbers, but we're pretty sure we're topping the fintech charts with this week's biggest stories. Joining me to bring you the swiftest, see what we did there, headlines in the world of fintech are our brilliant panellists. Let's meet them. First up, a very warm FinTech Insider debut for Dan Dallaster, General Partner at Fox Capital. Welcome to the show, Dan. Always exciting to have a debut. Would you mind telling our listeners a bit more about yourself and your role at Fox Capital, please?
Of course. So thank you very much for having me. My name is Dan Dallaster. I've had a career of the past 17 years, mostly in early stage operating and investing. I spent 7 years at Route 66 Ventures here in the Washington, D.C. area where I live. After that, I joined a fintech startup named Rise as their COO and Chief Commercial Officer in the banking as a service realm, was able to help grow that to a nice post-Series A. And then we were opportunistically acquired by Fifth Third Bank in 2023. I then joined Fifth Third Bank and led the revenue operations for Newline. Newline is their partner and sponsor banking dedicated division here in the U.S. And then stars aligned. I was able to regroup with an old colleague of mine I've known for a decade named Ruth Fox-Blader, who began Fox Capital, and I joined her earlier this year in the role of a general partner to be back on the VC side. And her and I are excited. In the next few weeks and months, we'll be announcing a new fund, which more to come later this year.
Awesome. That sounds very exciting. I'll have to double check the records to see if I was correct, but I think I remember we had a guest from Fifth Third on the podcast, I think, when that acquisition was announced. So it just kind of feels like a nice sort of full circle moment to,
that's right.
To have you join
I think
us.
I helped organize that on behalf of Fifth Third. But
awesome.
but anywho, that's right. Thank you.
It's a small world. Well, thank you very much for joining us and looking forward to picking your brain as we go through the news today. Next up, we have a FinTech Insider return for Stefano Vicino, founder and CEO of Yapily. Welcome, Stefano. Great to have you with us. Welcome back to the show again. Can you tell our listeners a bit more about yourself and your role at Yapily, please?
Hi, Kate. Thank you for having me again. Second time this year. As you said, I'm the founder and CEO of Yapily. I started my career in science. So nanotechnology is where I come from, moved into investment banking. And then I was chief product officer of 2 other fintech before I learned about the banking, and I started Yapily. But most importantly, I'm also a father, a husband, and as the name may give away, I'm Italian. But 20 years in London now, so maybe more British now.
Oh, that's a great combo. Well, Always a pleasure to have you back on the show. So thanks very much for taking the time. And last but definitely not least, it's also a FinTech Insider return for Grant Evans, VP of WorldPay. Great to have you with us again, Grant. What have you been up to since we last spoke?
Yeah, so thanks for having me on again, Kate. Just continuing our geo-expansion journey of the WorldPay for Platforms proposition here in the UK market, really, where we're offering cards, direct debit and digital wallets on one single API integration. So really going after that embedded payments and ISV ecosystem, particularly focusing on recurring transactions. So lots of new partners coming on board, which is great. And we're gearing up for our first partner event in Q4 in London as well, which is going to be great fun.
Exciting. Well, again, likewise, thank you very much for taking the time and looking forward to getting your take on the news. So we have a panel. Now on to the news. And our first story is covered in lots of different places, but we've taken this one from Bloomberg. And that is Checkout.com seeks US bank charter for card payment processing. Checkout.com has obtained a merchant acquirer limited purpose bank, or MALPB, charter in Georgia, enabling it to directly access the Visa and MasterCard networks. The charter does not allow for standard banking activities like taking deposits or issuing cards, but permits it to authorize, settle, and clear payment transactions for merchants. The move reduces Checkout.com's dependence on third-party banks, potentially lowering fees and speeding up innovation and rollout of payment services in the US. To tell us more about this launch, we have a voice note from Checkout's Jordan Reynolds, MALPB CEO and head of North America Banking.
The state of Georgia has officially accepted our application for a MALPI charter. This is a pivotal milestone in our U.S. growth journey. Once approved, it will give Checkout.com direct access to the U.S. card networks, letting us act as our own acquirer, optimize every step of the payment process, and deliver faster, smoother, and higher performing payments for enterprise merchants. The U.S. is already our fastest growing region, with payment volumes up more than 80% last year, and we expect it to become our largest market globally by 2027. This charter is a clear signal that we're doubling down on that growth and building a truly U.S.-first payment proposition. We're also opening a new office in Atlanta, a hub of payments and banking talent, to support our expansion and strengthen our regulatory and compliance foundation. For our enterprise customers, from eBay and Pinterest to GE Healthcare and Klarna, that move means more control, more reliability, and a powerful alternative to legacy players in the market.
Well, first and foremost, I've learned that it's MALPB rather than MALPB, as I obviously butchered it before. Dan, I'll come to you as our US resident. What do you think this means for the future of payment processors in the US?
Yeah, great question. I mean, I think we've seen the same move from Fiserv early, I think within the past couple of years, as well as Stripe. And so I think Georgia has done a great job of fostering new ways to innovate, particularly in the payment space. I think what this means for most of the landscape is, as all these new entrants have come in to provide new, better user experiences, both on the consumer and the enterprise and small business side, now we have a number of those players. So now we need to find new ways to take advantages or new ways to either cut costs or find better avenues, because now the competition is just larger than it once was. And so this is a great way for these companies to be able to have a bit more control on the onboarding standards, on what it takes to service the merchant acquirer, or to service their merchants just directly with this specific. And again, to be clear, it's a limited purpose bank charter, so not to be confused with a more wide ranging bank charter. But it removes one element of hurdles that exists among that they otherwise would have to partner up with a third-party bank to be able to provide these types of services. Now, I think at Newline and at Fifth Third, we partner with Stripe to power their Stripe treasury. And so I think as all of these players continue to realize that payments is one angle of many others that they would want to get access to different pockets of their financial services, that this enables them to be best in class, particularly in one value prop, but in others, they'll still have to rely on, best practices and best in class operations from other banking products if they want to offer that. But I think this now raises the bar for what it will take to be best in class in terms of payments products, particularly on the merchant acquiring side. So, hats off to Checkout. I think it's a great move, and curious to see how some of their competitors on top of Fiserv and Stripe, who've already taken this move, will look to continue this trend.
Yeah, Grant, what's your take on this news? I suppose I'm also conscious, we'll probably have people listening to this show that understand the payments space really, really well, and some people maybe who are learning about it for the first time. So, maybe you could also, if it's not too much to ask, help listeners maybe understand like what actually does a merchant acquirer do, and kind of why is this important?
Yeah, sure. I mean, a merchant acquirer is obviously responsible for particularly processing card payments end to end. I think the traditional take of a merchant acquirer is that, certainly, but I think, to Dan's point as well, we aren't necessarily calling ourselves acquirers first and foremost now. Payments companies is a wider term because we have such rich stacks of products and services. I think I've talked about this previously, and even us embedding direct debit alongside card in our platform's proposition in the UK, the treasury solutions for payouts as the marketplace's ecosystem continues to evolve in a multitude of sectors is really important as well. And you've got stable coins coming into the mix and how acquirers work within that stablecoin ecosystem. I think the decision here from Checkout, and as Dan said, Stripe did this a few months ago as well. For me, the main thing is probably a cost benefit first and foremost as they continue to scale as a business, because there's obviously inevitably a third-party cost. And we talked about the build versus buy thing as well. And this is an element of that taking place and reaping the rewards of some of the cost benefit that sits around that. I don't think, from a legacy acquirer point of view, when you look at other players in the market, it's not necessarily something everyone will follow suit to do, because there's very rich relationships that exist with sponsor banks and partners that have been in place for a long time that bring other benefits to the ecosystem as well. So I don't think it will be a domino effect that we see, but certainly maybe for newer entrants, there's benefits for them in the short and medium term from going down this road.
Yeah, no, absolutely. That makes sense. And Stefano, obviously you are running a fintech, making these decisions probably for yourself as well. Would be keen to get your take on the decision that Checkout have made to kind of really go down this licensing route. Does it make sense from where you're standing?
I think it's the first thing I read when I read the news is a European British company doubling down on their global expansion plan. So I'm very excited for the team that they managed to obtain a license. Regulatory let's say approval are never easy. In the US, we've seen a lot of European company trying and then suspending for a couple of years. So I'm very excited about the opportunity that this brings to the Checkout team. When it comes to the let's say the specific license versus let's say other option that they had, I think Dan and Grant already covered it. So for me, it's more like say I'm excited for seeing other company tackling the US market successfully.
Yeah, no, absolutely. Dan, obviously we've alluded to kind of, as you said, this isn't a full bank charter, right? This is a license with quite specific bounds to it. So why do you think it was that they've gone down this more limited path rather than chasing that full bank charter? Is that just still an impossibly long, arduous process in the US?
I think it's still long and arduous. I mean, I think the windows has opened up more than it had in prior years, but it's still long and arduous. And what is going to be the ROI to get there? And I think until Checkout or one of these other players decides, I want to take in-house, lending and underwriting operations. I want to take in-house deposit gathering and managing everything required to do a bank charter. Then, why go after the bank charter and go through that huge process unless you're going to start wanting to take in-house the offerings of more than just the payments, the merchant acquiring product on the payment side. So I think they go after this because they see this is what we're good at. This is what we are built to do. So let's go ahead and collapse that stack and maybe take out a third party to reduce costs, as Grant mentioned. I think the full charter may make sense for some of the other fintechs out there that already have more breadth of offering. Again, but it's a long and arduous road and not one to take if you're not convinced that, well, we are going to utilize the charter to then be able to offer out many of these other types of products that it would afford. If not, then yeah, let's find a narrowly defined but very purpose-driven license for us to enable to continue to grow and scale the business that we own in-house and are good at.
Yeah, no, absolutely. And obviously a kind of a part of this announcement has been them also sort of talking about opening up this new hub in Atlanta, focusing on that sort of state of Georgia. Again, we'd be keen to kind of get your perspective on are these fintech hub destinations being driven by where companies can get charters, or are there kind of other factors at play in terms of kind of the ecosystem, the support that's in place in those different states that are influencing where some of these companies are choosing to base themselves in the US?
Yeah, it's a little bit of both in that, Atlanta has always been a strong payments hub. FIS is one of many companies that have built a long history and heritage in the Atlanta area. So I think as an ecosystem sort of naturally develops, then regulators and state officials may come around to the idea of like, oh, wow, a hub has been created. So now let's like bolster it. And it's almost like a self-fulfilling prophecy. So it required good companies already building good products to start a bit of an ecosystem to then open the eyes of state officials to see, okay, well, let's double down on this advantage. And so now you see, and now I think now more fintechs will start coming to Atlanta on the back of this. So I think it will be just a self-fulfilling prophecy. And Atlanta has always been a market that I've been very fond of. And so, yeah, I expect more great companies to either set up some type of operation or take advantage of the warmer regulatory embrace from Georgia.
Yeah, no, I had a quick peruse of the FinTech Atlanta website prior to us hitting record on this show, and it does, it sounds like they're making some really good strides. So, to claim 6 of the 10 largest payment processing firms in the US kind of being based there, so you can sort of see.
And having a huge airport doesn't hurt either. It gets easy to get in and out of. So
yeah, no, transport's absolutely key. Grant, I suppose interested to get your take on, does actually having like lots of these different payment processing companies in the same area, is that important? Like, do you think kind of having that kind of environment of companies all co-located helps or hinders?
It's handy from a staffing point of view, I would say. There's probably a bit of a movement that takes place across the payment ecosystem. I think more interestingly as well, the time zone differential. We're talking about UK companies quite often where they're going to choose their headquarters and be on Eastern time versus certain other locations. It makes a lot of sense for having your teams get more time together during the working day to actually collaborate. And as a global business like WorldPay, we obviously have teams all over the world, and I find it easier sometimes to work with the Eastern time colleagues than maybe other parts of the world. So there's a geographic benefit, and maybe the sort of movement of people is less relevant with us as kind of being more remote than we've ever been. But it does create, a community, and payments is a very, very collaborative space, more so than it's ever been, I think. And there's no harm in businesses being very strategically sort of positioned in the same locations like they tend to be around the Atlanta area.
Yeah, no, absolutely. I suppose, I think we'll have to move on to our next story after this, but Stefano, I suppose it's interesting, you mentioned in your kind of first response here, but it's really positive to see a UK company expanding into the US and kind of having that success. I'm keen, obviously you are juggling the UK and other markets as well. Like, how difficult is it as a leader of one of these businesses to kind of manage that growth across multiple markets successfully? Do you think there are some things that Checkout.com are going to really have to watch out for as they really go in on the US as a market?
I'm sure they already have mastered this by being present in so many geography. So I'm not surprised by the choice of Atlanta in this case. Usually when you set up a new office, you are after either where your customers are or where you can find the right talent, or logistical benefits like Grant was explaining. So in this case, I think they have all the three, because in Atlanta, it will be easier for them to find the right talent. And they will have lots of partners and potentially also customers around them. And logistically makes sense because they have almost half a day overlap with the UK headquarters. So whenever you think about geographical expansion as an organization, these are probably 3 of the main pillars, and then depending if you're after a new geographical region from a commercial perspective, obviously where your customers are is more important than others. In this case, I think it meets all the 3 criteria, so they got it right.
Yeah, absolutely. Well, we'll have to keep our eyes peeled to see how this impacts their development in the US, but fingers crossed. Our next story is Yapily based. So Stefano, we'll come to you first. Yapily supports Google to provide bank account verification services for business customers in Europe. Yapily has partnered with Google to support the rollout of Google's bank account verification service for business customers across Europe using open banking infrastructure. The move comes amid rapid open banking adoption in Europe, with 63.8 million users and the sector valued at over £4 billion, growing over 70% year on year. Yapily, now profitable and rapidly expanding, connects to over 2,000 banks in 19 markets and supports use cases like account-to-account payments, transaction insights, and cash flow tools. The partnership strengthens Yapily's position as a leading open banking platform, adding to major partnerships with firms like Adyen, Ant Group, and Intuit QuickBooks. Obviously going to come to you first on this one, Stefano. Great to have you on the podcast to talk about it. Again, maybe could you explain what this partnership represents? Like, what is it you're kind of hoping to deliver with Google?
Obviously, as a founder, it's an amazing milestone for me and the team that worked tirelessly for years to be able to work with an iconic company like Google. So it's a validation of what we've worked on for the last 6-7 years as a team. And I think that will be the same answer that any company would do. When you start a company, your dream, your ambition is to serve the best-in-class organization. So for us, this shows two things mainly. One, the maturity of the organization that we now are. So we have a reliable, performant, trusted organization, not only technically, but also from a financial standpoint. When a company like Google decide to have a partner and invest in a new space, obviously making sure that the partner they choose is going to be there in 10 years. It's obviously important. So I think this proves the quality of the platform we've built, but also the quality of the business that now is a sustainable business. And on the other side, obviously, it's exciting for the open banking space in general. It's a validation of the maturity of the space. When company like this decide to move a first step, it shows that technology is mature and is hopefully is going to be a catalyst for a lot more company to follow.
Yeah. I think probably it's highly unlikely that people listening to the podcast won't have heard of open banking at some point. But again, I was just conscious that there might be some people that are kind of relatively new into this space. Would you mind kind of explaining to those listeners maybe what it is practically that these kind of bank account verification services will help business customers to do? What is the kind of the broader ambition that Google has that you're partnering with them to deliver?
Of course. So maybe to answer the first bit of the question, what open banking is, and then how it's used in this situation. What open banking is the concept of a user being in control of their own financial data and being able to share it via API within a few clicks to a third party that might want to have access to this information, either for identity verification or lending or affordability check, or also with the same approach, so a few clicks, be able to move account to account, moving money directly from your bank account A to a recipient bank account B. So in this situation, obviously without going too much into the detail, if you can verify you are the owner of a bank account that you're using, you satisfy, let's say, anti-money laundering check, because by accessing it via API, you prove you are the owner of the account.
Okay, no, absolutely. Grant, I come to you on this one as well. What do you think Google's move into this sort of bank account verification space means? Why is it significant that they're doing it at this moment in time?
Yeah, I just like Stefano's opening description of open banking and what it should be is quite poignant with what's going on in the US around data being free or not free at the moment, right? So yeah, that's a very debatable topic as to what it should be versus what it maybe is becoming in certain markets. And I'm not saying that's the wrong thing necessarily, but because there is tangible value in the facilitators of this data and how they present it and service it for end customers. But yeah, it's quite a poignant one for me. I think that to the Google point, they're not the only very large enterprise that's going down this road. It's great to see a partnership like this taking place, and it's great to see us talking about the data side of open banking rather than the payment side, which I'm a payments guy at heart, but it does get a lot of focus when actually there's amazing use cases like this happening left, right, and center in the market, which is actually really leading to some of the growth that we're seeing. The 17% of European e-commerce transactions going for open banking, which I know we'll talk about, I'm sure, as well. But some of that's being driven by the mandation of pay by bank as a service, whether that's paying off your credit card or certain sectors stripping out card payments altogether because it's a stronger use case for them. I don't think cards are necessarily going anywhere, but from a data point of view, we're seeing massive growth and adoption the confirmation of payee side of things was always a frustration for users of individuals actually making payments, businesses as well, that fear of making errors or sending money to the wrong place. Like we've removed such a massive friction point from customer and merchant journeys with that deliverable of that product. And well, congrats to Yapily, really. I love to see partnerships like this taking place.
Absolutely. Dan, obviously, as Grant alluded to, we've talked a few times on the show about the kind of emerging debate around open banking in the US. How does it feel to kind of be sat in Washington, kind of reading this sort of announcement about how open banking developments are unfolding in other markets compared to where you guys are sat there?
Yeah, great. And let me say congrats to Stefano. That's wonderful. Great. I love to see it. And as a fintech person here in DC, I want all things fintech to be as validated as possible. So this furthers the case. So yeah, I mean DC. What's good about living here is no one really knows nor cares what I do, but everything on the Hill has major ramifications for what it is that we want to grow and innovate within the sector. So I'm able to kind of get into rooms and kind of see, okay, where are things moving left, right, or center here. I mean, I think the idea of open banking not taking off at some point or other in the US is in my opinion, I mean, we're on an up and to the right trajectory. So I think it's just a matter of time for things to become more widespread adopted. I think the debates around the cost of it, who's paying for it, it reminds me a little bit of the tariff discussion. I mean, at some point, maybe someone's going to insert some costs, and then who's going to end up bearing the actual cost of that? If things cost money, they do need to be paid for. And if ultimately, because if they continue to run a loss for a service that's important, then the infrastructure of open banking would be at risk. So the idea that there needs to be some introduction of a cost is not one I necessarily disagree with. Now, a matter of who should be paying for that, I think that's up for discussion. These things, Google partnering with startups to show how this data being in the hands of users can provide more than just the use case for, let me pay this over here is an important one. So again, I think it's just a matter of time before the adoption follows. A lot of what has happened in Europe. Now, again, how it will be implemented, there's a lot of influential lobbyists and government affairs officials from different organizations trying to put their imprint on various statutes and regulations. So we'll see how it all plays out.
Yeah, for sure. Stefano, obviously, it's super exciting kind of what you're announcing today. I suppose I'm also keen to get your perspective on what do you think comes next within open banking, particularly kind of with that business lens. We've seen lots of developments in kind of applications and use cases for retail customers, but it feels like we're just starting to scratch the surface and how open banking is deployed for business customers. What is it that you kind of are most excited to see happen next in this space?
As a founder, I'm very excited about and optimistic about a lot of things. But open banking is reaching, let's say, the maturity level for which, let's say, big companies are deciding to invest, both from a retail standpoint and SME. Our first customer 6 years ago was QuickBooks, $200 billion market cap organization. So it's not like enterprise were not looking at it for a long time. Simply now, I think a lot more organizations are investing in it. I think last time I came on the show, it was to announce Adyen, and that was going live with us, which is another fantastic, let's say, proof of open banking being, let's say, at a mature stage. What excites me a lot is definitely the premium API. Maybe 12, 18 months from now, we will finally see them, let's say, being adopted more widely. There is a lot of activity and work done by the ecosystem, especially in the UK, to have a alternative to card and files and debit cards, and direct debit via premium API. At the moment, open banking was designed for a user to be there and approve every single transaction rather than giving a mandate to a merchant to, let's say, approve a recurrent transaction. So premium API will significantly increase the adoption of open banking. So if you look at the retail side, if you look at the SME side, it's always been an underserved market. So the opportunity there, both from data and payment, is simply gigantic, in my opinion. And so it's great to see that more companies are using open banking to enhance their SME services. On the SME front, we have, as I said, from the QuickBooks of this world, the Pli, or so many that are already leveraging open banking. I just want this to grow even farther. So when I look across the ocean, the US also excites me, if I have to be honest. There are currently 80 countries, more or less, around the globe that are embracing open banking in one way or another. So it's a rising tide around the globe. US, the difficult thing is, as Dan was saying, is understanding the how is better to proceed. Once it's decided that if someone pays, who pays, how it's paid, the ecosystem will come around and will find a solution to make it work. What is a bit difficult is to build a business when there are so many moving parts and so many people trying to change things in one direction versus the other. So as soon as there is more clarity, I think there will be a further acceleration in the US as well. Let's not forget that the first open banking player in the world was Yapily. In 1999, it was a US company. And after that, we had so many other US companies that leverage open banking, or let's say a variation of it. So it's not new in the US. There are probably more than 100 million users on a monthly basis already leveraging a shape of open banking.
Yeah, no, absolutely. Well, I mean, again, we need to wrap on this story, but just really wanted to conclude by just saying another massive congratulations to you and the team on the partnership. And everyone at 11FS is kind of excited to see what you guys do with it next. So all the best to you and the whole team with it. So on that note, we're just going to take a quick pause here. We'll be back very shortly.
At Thales, we know cybersecurity can be tough and you can't protect everything, but with Thales, you can secure what matters most. With Thales industry-leading platforms, you can protect critical applications, data, and identities, anywhere and at scale with the highest ROI. That's why the most trusted brands and largest banks, retailers, and healthcare companies in the world rely on Thales to protect what matters most: applications, data, and identities. That's Thales, Thales. Learn more at thalesgroup.com/cyber.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001, or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster, so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Before we dive back into the news, a quick heads up on our latest Insights episode. We're talking about stablecoins again. Yep, again. But this time it's more than just hype. The market caps jumped from $200 billion to $270 billion. Monthly transactions have hit 1.3 billion, matching Swift's volume, and real use cases are finally generating real revenue. In this episode, in partnership with Fireblocks, David Barton Grimley and an expert panel are getting practical. How do you actually operationalize stablecoin payments? We cover architecture, compliance, KPIs, and the common traps to avoid. Catch the episode now. It's on the same feed as this one. And now, back to the news. Our next story comes from Finextra. That is, Yup raises $32 million for Southeast Asian digital bank. Yup, a Singapore-founded startup, has raised $32 million US dollars in its C1 funding round, bringing its total funding to over $100 million US dollars. The bank is targeting working and middle-class customers in Southeast Asia, aiming to be a principal payment tool for them. Yup has seen its revenue double each year for the past 3 years and expects growth to accelerate further in 2026 and 2027. The new funding will be used to expand into new markets, including Hong Kong, Vietnam, and the Philippines. Yup expects to reach break-even by the end of 2025. To tell us more about this raise, we have a voice note from David Barton-Grimley, Strategy Director and Head of Product at 11FS.
Southeast Asia just has massive potential for fintech growth, and has been attracting a lot of investment in recent years. This whole idea of trying to launch a pan Southeast Asian bank is not new. It's been a big theme. I think lots of players have explored it and have failed. And I think one of the biggest challenges, of course, with that is that, like any region, but Southeast Asia in particular, these countries are very, very different. The languages are vastly different. The regulatory regimes are vastly different. Cultures are just really different. So the idea that you can have a single bank like Neobank somehow dominate the region just hasn't really materialized. However, if there was one player that could potentially do it, I think it is Yap. And the reason that is their Indonesian focus. So, Indonesia is one of the largest emerging middle-class markets in the entire world. So in some ways, it very much does resemble Brazil. It's very difficult to get a license in Indonesia, and they've gone and done it. And, they are in some ways headquartered in Singapore. The technology is built out of Singapore, so they have the regional hub there as well. So it'll be very interesting to see what they do with this money and how they put it to good use. But I think this is a very important move for fintech in the region.
Awesome. Thank you, David. Dan, as our funding expert, I'd love to come to you first on this. I mean, how much of your time do you spend focusing on Southeast Asia? I'm conscious that probably North America probably keeps you pretty busy as is, but yeah, what's your take on this?
Yeah, I spent much of the last decade. I was on the board of a couple companies based in Hong Kong. Look, Southeast Asia, half of the world lives in a concentric circle that's all focused around Indonesia itself being the fourth largest country in the world. I mean, so the population itself warrants a great deal of attention, and I think what's also very attractive about that region is that there is very little rip and replacing that's required. The lower and middle classes, everyone that's of this cohort generationally has grown up with newer technology, newer modalities of communication. The internet is now is really the first way many of these communities have started to communicate. And so rather than having to change patterns of how individuals and communities engage with their money and engage with these financial decisions, you're able to start with a fairly fresh plate. And I think that's why new players can come in and really build businesses fast, because they don't necessarily have to rip and replace what otherwise are fantastic experiences that they've been sitting on for the last 20, 30, 40, 50 years. So the conditions are there in these emerging markets with such great population and a lot of economic growth on top of that. It's no wonder that great companies, great founders will choose the region to try and build generational businesses, because all the ingredients will be there.
Yeah, but as David alluded to in his voice note, like there's a huge opportunity, but also huge challenges, right? Like this isn't just, you don't just walk into this market and roll something out and it just is automatic success, right? Have you got any learnings from your time in the region about kind of what you think it requires to be successful here?
Yeah, I was on the board of a company named Compare Asia, and I think one thing they did very well was it was a pan regional business, but they really had local headquarters throughout. Now that has its own challenges, because now you have who's really calling the shots if you're trying to run a multi-geographic business. But the head of Singapore says, I need the site to look like this versus that. So I think they grew a lot by learning from those challenges, but I think there are horizontal best practices. Like, okay, what are the types of financial products that this fairly common economic strata requires? So, like, think product-wise, you could build fairly horizontal the services and the offerings, but then the distribution will have to be slightly different from region to region. The types of ecosystem evangelists and thought leaders in each region will be slightly different from one to another. So I think there's a way to do it, but certainly not without challenge. But again, I think That's why we love what we do. There are brilliant founders who can solve otherwise solvable problems. But I think the underlying requirement for fairly well-known products and well-known services, well-known offerings are there. And then it's a matter of what are the right distribution methodologies to be able to attack each country and each region specifically.
For sure, yeah. Grant, I'd be interested to get your take on, they've talked about trying to become the principal payment tool rather than sort of going after kind of a full banking relationship. So what was your take on that?
Yeah, I mean, Southeast Asia's, there's a lot of similarities to what's gone on in LATAM, and everyone wants to be the next new bank or the next Pix, right? And by targeting a specific demographic of customer base, they feel that they can go on that quicker growth journey, because there's a couple of poster childs there in terms of recent significant growth. There's a huge amount of investment going on in that region. I mean, I was at NomuPay before joining WorldPay, and you got SoftBank investing in payments companies like those guys, because some of the licensing that they had, an Indonesian acquiring license, for example, which to Dan's point is like gold dust, right? It's not that easy to go into these markets and get a local acquiring license very easily. I think with Pix as a payment method, one of the main reasons they saw such significant growth so quickly was the central bank was backing and supporting it as a payment method, right? So if you get the regulators and those sort of driving the banking ecosystem on side sooner, your route to scaling will be faster. And it does look like a slightly more convoluted market with some of the existing players that are on the ground there. So they might face some challenges from incumbents. But the opportunity in terms of the demographic they're going after, the population that exists there certainly is so vast that if they get it even slightly right, they probably are going to go on a growth journey to the one that they're talking about going on. But I just think it's a fascinating market because there's so many different local payment methods and alternative payments methods, even in a huge amount of these Southeast Asian countries, that I do slightly feel like becoming a dominant player is going to be harder than maybe it would be in certain other markets, just because there are like QR codes right out there. We got QR codes in COVID and we thought we were rewriting the wheel, and you go out to Southeast Asia and you're like, oh, they've had QR codes literally for everything for years and years and years. So yeah, it's interesting that the money is certainly moving in that region at the moment, but we'll watch with interest from over here, I think.
Yeah. Stefano, what captured your interest most about this story?
As Kat was saying, Southeast Asia is a super interesting part of the world where everybody is digitally native. And they are a lot more advanced than we think we are here in Europe. QR code is everywhere, and everyone's life tend to be in a wallet or in a super app. And all of these are now embedded into everyone's life. So I think as a new entrant, I think trying to displace, for example, in Indonesia, a company like Dana, which is embedded in everyone's life. There are so many, let's say, regional champion already. It's going to be difficult to displace them. Potentially partnering with them and being more complementary could be a way to go. Everybody uses Alipay as a payment method. Or they use a local wallet. So I think the opportunity is huge because everybody is native with QR code and payment, and their life is in the wallet they use the most. But the challenge is equally significant.
Yeah, we'll have to wait and see what they do with that $32 million. But congratulations to the team. I think, they've had multiple raises in a really short period of time. So obviously on an exciting growth journey, fingers crossed. Okay, our next story comes from the Financial Times, and that is Monzo plots new move for US banking license. Monzo is reportedly considering a new application for a US banking license, aiming to re-enter the prospect of becoming a US lender. The renewed interest is driven by a more favourable regulatory environment, with both the OCC and FDIC having eased guidance that previously made banking charters harder to secure. Monzo had previously withdrawn its US license bid in 2021 after regulators signalled low chances of approval at a time when Monzo was under financial pressure. If successful, Monzo hopes the license would strengthen its US expansion, enabling it to offer banking services directly rather than via partner banks. Obviously, I guess a couple of overlaps with our first story in terms of the trials and tribulations of US banking licenses. Dan, again, I'll probably come to you first on this. Do you think this is the right time for Monzo to be dipping its toe into the licensing waters again?
Yeah, look, I mean, it's never going to be an easy time, but I think given some of the signals from this administration and the regulatory bodies, they'll have a better chance. They probably are taking into calculation that if we want to go for it, we likely should while these current factors are in play now in the United States. Again, I think it's taken a while for the U.S. to adopt a lot what the U.K. started adopting last decade, which is making it a bit more clear, providing more clear guidance on what it takes to be able to foster more competition among some of these fintechs in the U.S. So again, I think we're on the long road up and to the right where we'll see that ecosystem open up or the environment become a bit more friendly to that. But certainly the regulatory environment is a bit more friendly now than it was under the prior administration. So I think Monzo is taking a good calculated risk that they should begin that process now. Obviously, they're a well-established name. They have a strong financial backing. They have a terrific team. So all the ingredients are there that should look good on paper to be able to have a good chance to secure that licenses. And of course, like if you're able to, and Monzo is in the business more than just merchant acquiring, for instance, so it makes sense for them to go for a more wide-ranging charter to be able to offer lending and other deposit and other banking services. So makes all the sense in the world to me that they feel that they're in a position to be able to do so now compared to a few years ago. And the window is more open now than it was. So it makes sense to me.
Stefano, another UK business trying to break the US. Are you similarly excited about this? And what do you think is different for Monzo?
I'm always very happy when I see European companies succeeding abroad. That's for sure. I think Dan said it very eloquently. I think that Monzo is now a different company from 4 years ago. It's much more established, more robust. It's much bigger, better capitalized. So potentially from internal perspective, they are in a much stronger position to go for a banking license. And also regulatory views change, regulator change, administration change. So maybe they think it's a better timing to try again. So I'm sure they have a lot higher chances this time around. And so I wish them best of luck.
Yeah, no, I think definitely we all hope that they can be successful. Grant, what do you reckon? Are you backing them, or do you think it's going to be difficult?
Oh man, I'm going to get my violin out for the LSE, I think, to be honest with you, because it just feels like the beginning of that US listing journey that Monzo is going to go on, right? And, they've got every right to do that. I think people were looking at the struggles they had a few years ago and what was going to be the position that Monzo ended up in. They've massively turned the corner. I mean, I'm a massive fan of Monzo, as most people know, but it is a shame that it does look like this is heading towards what will be a US listing potentially for Monzo in the longer term, I feel. And they'll have to grow in the US a little bit more probably before they make that decision to ring the bell. But you can't really blame them with everything that's going on as far as the differential between the two markets is concerned. Dan mentioned obviously the open door policy maybe that's going on under the current administration, which is a great place for financial services and fintech businesses. We've seen crypto obviously booming again over in the States. So timing is everything with these things, and it is a shame. And hopefully we don't continue to Stefano's point, great news to see UK companies doing really well in other markets, but it's also disappointing that it does feel like that will mean that they're probably not going to list in the UK maybe. And I know that they've been a little bit coy around what that decision might look like, but my personal opinion would be that it does feel like they're leaning towards the US, and you can't really blame them when you look at the amount of other companies that are deciding to list there currently rather than the UK. So we need to look internally in the UK market as to what we can do to actually resolve this from continuing to happen. And there's a lot of good commentators around things that could change at the moment, and yeah, we'll see what happens, I guess.
I agree with you, Grant, that it's a shame if they don't list in the UK, but the government has time to make some changes. It's difficult to be doing a successful listing unless your core business in the US. And I think for Monzo might take a couple of more years to get there. So, my optimistic side, this gives time to our current government to make the changes that might make the decision of Monzo a bit more challenging than it is now. As you said, probably a lot of the company are leaning for US listing, but they have to make a US the core market first. Otherwise, for investor, it's difficult to really see the valuation that they offer to local company.
Yeah, maybe just the one more thing I'd add, because I think some of the topics we talked here is like, oh, if you can, great, then go get a charter or something. And I think that's oversimplifying, I think, what it means if you are a chartered institution. So I'll obviously give a plug to some of my old colleagues at Fifth Third and Newline, where it is a cost center to run everything you need to do to now be under the purview of a regulator, whichever regulator that might be. And there's much more risk of screwing something up. And if you screw something up, like, game's over. So as we've seen from a lot of the other sponsor banks in the US. So I have no doubt that when folks like Monzo or others take the decision to go for it, like, they understand that the apparatus and the infrastructure that we're going to have to put in place is going to be significant. And of course, they've made the decision that that's going to be of better ROI than partnering with a bank or what have you, whether they think it's for their own control or for economic benefit. But there is getting the charter, and then there is like, okay, now we're operating a bank. Let's make sure we don't have any regulatory actions against us, any warnings or what have you. Like, that is, so it is not for the faint of heart, even if you are in a strong position to go get a charter. And maybe the last thing I'd say is I've always been a London enthusiast, and I think what has always been great about the London fintech market, as unimportant as it sounds, is like, you have all of the government, you have all of the old school financial services, and you have all the tech in one location, which provides for significant speed of getting things to market, which I think has always been a big advantage for London. I think in the US, yes, this administration, I think has taken a different approach to opening doors up, but we still have dislocation between New York, where you have the old guard of financial services, you have the Bay Area, obviously, where tech is coming, and in DC, which, although today is more open, it is more unpredictable. I mean, you just don't so the unpredictability of what will happen is now, I think, forcing folks to say, oh, well, let's go ahead and grow the bank. Why you're seeing a lot of bank M&A happen, because if we're just larger, it'll be easier for us to insulate against what we don't know about the future. Folks like Monzo, let me get the charter now because I don't know what's going to happen in the future. So I think, obviously the US is the US and will always be a behemoth. But I hope markets like London and others around the world lean into the advantages that they have, which is we can get things to market faster because we have such a cooperative ecosystem of all those, particularly in fintech. You need regulators, you need old banks and the old guard and tech to work together to really bring things to market. So I'm not quite ready to put the death knell in London yet, but also that might be the East Coast bias where I want both my right and my left to succeed. So.
No, I think there's.
And then there's also a risk. Sorry, I was going to say that there's a risk then as well that we have companies building in London, getting to a certain size, and then going, thanks for all that speed and innovation and delivery that helped us go to market. We're going over to the States to list now, right? But it's good for me because I've got early stage Crowdcube investment. So yeah, fingers crossed that's not going to dust that down and hopefully benefit from that in the long run.
Yeah, no, fingers crossed. No, absolutely a ton of great points, I think, on multiple fronts there. Our office is actually just across the road from Monzo's, so I feel like I'm gonna have to get the binoculars out and start trying to peer through the windows to kind of get some early insights. But yeah, we'll wait and see whether this attempt comes to life and whether it's more successful than their previous adventures. Okay, on that note, we're going to take a very quick pause here. We'll be back shortly.
Finished training for the day? Time to fight post-workout fatigue with Core Power Protein Shakes. They're packed with 26 grams of high-quality protein to build muscle and electrolytes to help hydrate. The nutrition you need to help your body replenish, rebuild, and repair post-workout so you can power on to the next one. Champion your recovery with Core Power. Visit corepower.com to learn more.
Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you'll find just as interesting. This story is taken from Finextra, and that is Big Issue partners fumopay to let sellers accept open banking payments. The Big Issue, a UK-based social enterprise and weekly magazine, has teamed up with open banking payments provider fumopay to enable its magazine vendors to accept instant account-to-account payments via QR codes. Here we go, here they come again. No card readers, no Wi-Fi required. The pilot aims to help vendors who might be excluded in the shift away from cash. With cash transactions in the UK massively down, many vendors risk losing sales without digital options. The enterprise provides people experiencing homelessness or facing poverty with the opportunity to earn a legitimate income. Vendors involved in the trial report benefits: faster access to earnings, increased sales, and greater confidence in handling digital payments versus traditional card solutions. The initiative complements Big Issue's broader efforts in financial and digital inclusion and may be expanded to more vendors over time. We've obviously touched on QR codes a bit earlier in this show as well, and we spent a fair bit of time at our recent live after that podcast talking about a new QR code-based payment experience being offered by WhatsApp in India. So I feel like I'm surrounded by QR codes at the moment, but that's the way the world is moving. But the use case here seems pretty clear. This feels like a really smart initiative to give these sellers more ways to take payments, by the sounds of it, get the money into their pockets much faster. So my main concern is I'm obviously going to have to rethink my typical excuse of, sorry, I don't have any cash, which I've used to, hopefully politely in the past, decline the opportunity to buy a magazine. But I am going to have to come up with something a bit more imaginative now, which is a good thing because it's a very good cause and people should definitely support it if they can. Okay. And finally, now time for something a little bit different from the world of business to finish this week's news show. This story comes from The Guardian, and that is new California law bans loud ads on streaming services for peace and quiet. California has passed Senate Bill 576, a new law requiring streaming platforms like Netflix, Hulu, Disney Plus to ensure commercials' volume matches the audio level of the content they interrupt. This law extends the principles of the Federal Calm Act, which already regulates loud ads on broadcast TV. The legislation was inspired in part by a complaint that a newborn baby was woken by a loud ad, highlighting how intrusive loud ads can be in households. Streaming companies have until July 2026 to comply. The law could effectively influence industry standards nationally. Who is the most excited about this? I am very excited to read about this. As someone that has a 9-month-old baby who has definitely had their baby woken up by the TV, I feel like this is something that's not spoken enough about in society. Grant, were you thrilled at reading this?
It's the decibels, isn't it? Like, you're watching a nice relaxing show, and then more and more of the platforms have gone paid service now as well. You have to pay more to not have adverts. If you're a bit tighter for a platform you use less, you've suddenly got these adverts shouting at you now. So yeah, I'm all for it. Can we have it over here as soon as possible, please?
Yeah, Dan, I mean, is this something that's impacted your life? Are you looking forward to seeing this roll out?
It's funny. I have not been following this, so I was still a conspiracy theorist, thinking that I didn't know that they were actually doing that. So I was like, wait, but they are. So I assumed they were, and so I am thrilled to hear this because also my youngest is now 3 years old, so I'm a little bit out of the newborn phase. But the number of times when this would happen, and my wife would yell at me, "Turn them down!" I'm like, it's not me. It's the so. This is great. Very, very validating, and I'm not crazy. So that's great.
Think about the ripple effects this could have for, marital harmony across the US.
Divorce rate will start plummeting, I think. But yeah,
fingers crossed. I mean, Stefano, do you think we need something similar to like fintech push notifications? Obviously, there are lots of things which jump into our lives and for good or bad reasons.
On the, let's say, the main news, I don't watch enough TV, but I think applying to real life, I would love to turn the volume down on a lot of things coming our way. You said push notification on certain services, cold calling, and all the spam that we receive in our phone. Having more control in all of that probably would affect my life a little bit more. At home, we don't watch enough TV. My son is 4 years old. He's not authorized to watch TV yet. My wife agreed that when he turned 5, we will be able to switch on the TV. So I have a few years of peace for the moment. But in my life, I would like to turn the volume down on a lot of things.
Oh my gosh, you've done so well if you've not started using TV with your kids already. It's like one of my main parenting tools. Shame to admit. Okay, we all get one thing that we can ban by law. Grant, what are you choosing to ban?
It's going to be train related for me because I like to rumble on about the British train network, but it's not going to be loud people talking on the train. It's something that's crept into the UK whereby people feel that they can eat really inappropriate food on a train journey now. So I'm not going to ban eating on the train, but if we could scan in people with their chicken katsu curries that decide to sit right opposite me on a long train journey, that would be greatly appreciated.
Yeah, I mean, it doesn't happen to be very often because I live a very sad life. But after we recorded the live After Dark show, I did end up getting like the last train home out of London Waterloo. And I do feel like well, you have like passive smoking, don't you? Where you sort of like ingest other people's fumes. I felt like I passively consumed at least like 5 McDonald's because everyone around me was just drunkenly necking McDonald's. So I can definitely get behind that. Stefano, what are you going to ban?
I don't know if I will make friends or not. I would like to ban social media below 18 years old. It's affecting society a bit too much. But I hope this will be in place before my son understands how to use my phone.
Yeah, no, I'm definitely hoping for the same thing. Yeah, I mean, obviously Australia are kind of trying to push the boundaries there. So maybe not as far off as we might think. Fingers crossed. Dan, what about you? What are you going to ban?
Well, I think societally, we once lived in a time where you're not supposed to talk about religion or politics. So I would love to maybe find a way to ban it. But then again, all of a sudden now I'm infringing on free speech, which all of a sudden now I've entered into the political realm. So it's just, I don't think there's any solve for that. But that would be great to be able to engage in discussions, particularly where I live and not have to veer directly into the political realm.
I think that would also probably have a good impact on like divorce rates as well, probably.
That's right.
Yeah, I think if I was going to ban something, I've got a really ridiculous phobia of polystyrene. So like that packaging that kind of surrounds, like whenever you kind of receive something in packaging. So I'd like to claim that I would like to ban that for sort of environmental purposes, but it's really just because every time like I open a parcel and it's got polystyrene around something, I just have to like put it down and run away just because like the noise of it just fills me with fear. But yeah, no, that would be what I would ban. Okay, on that note, I hope everyone has Fintech Insider set to an appropriate volume and that we've not interrupted your babies or woken anybody that was having a nice nap on the sofa. That wraps up today's news. Thank you so much to today's guests. Where can people find out a bit more about you and your companies or the work that you're working on, Dan?
Yeah, like I said, a few months ago, I rejoined Ruth Fox Blader here at Fox Capital. We're investing in pre-seed and seed companies and fintech adjacent areas. And as I said, stay tuned. In the next few weeks and months, we'll be announcing a new fund, which we'll be excited to talk about. So, but until then, we are investing like normal.
Awesome. Watch this space. Brilliant. Stefano, what about you?
You can please find me on LinkedIn or reach out to me directly via email. Yeah, looking forward to engage with anyone that is interested in knowing more about open banking.
Fantastic. And yeah, best of luck with the partnership as it rolls out. And Grant, what about you?
Yeah, we're on platforms.worldpay.com if you want to find out a little bit more about our embedded payments engine. And me personally, I'm readily available on LinkedIn. So drop me a message on there.
Awesome. And as for me, also on LinkedIn, Kate Moody, or you can drop me an email, kate@lemonfest.com. Thank you so much for listening to today's FinTech Insider. If you like what you heard, please make sure to follow us on your favourite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcasts@11fs.com. Thanks again and goodbye.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.